AIM-listed Seeing Machines, the eye-tracking technology specialist, reported earnings this week. It came through with a big reduction in the loss seen in the previous year, reporting a drop of 1.6 million Australian dollars. That was down from the 10 million or so in the same period in the previous year. The income it now has through from mining truck giant Caterpillar accounted for about 2/3 of the total revenue over the year. Now, much of that was due to a single payment, but Caterpillar is going to continue to contribute to revenue over the next several years. Revenue itself rose over 161%. Caterpillar uses the technology to prevent driver fatigue from causing accidents. Seeing Machines says the technology has intervened in over 150,000 fatigue events since 2015. Ken Kroeger joins us now with some more analysis of the numbers and more. Ken, welcome. First of all, I think one thing that stood out for me that wasn't in the report was the fact that there was no progress on the FOVIO deal in terms of what that brings, because that's all part of now, I believe, going to be the part of the business that will ultimately end up in the domestic cars.
Yeah, I think we have to remember that regardless of whether we spin the business out or not, there's a lot of automotive activity going on inside the business today, including delivering the first two programs that we're contracted for and trying to win more. But the spin out itself, we're finding that there's a lot of capital on offer, but some of that capital is coming with terms that aren't quite what we want. And we're still working at building a syndicate. We think we'll do that this year. But there is no turning back once we do this, so we want to make sure it's done right and that it's of value to the current shareholders as well as the right moves for the company.
Just a few days before you reported the earnings, I know you appointed the chief executive of FOVIO, didn't you, that unit? Who is he? Where's he come from?
Yeah, that's a great question. So his name is Mike McAuliffe. His most recent activities have been working with an Irish company called Aviation and building that company and selling it to a Japanese semiconductor giant, Rome. So he's just finished a year with Rome running that division. He's got an extensive automotive, semiconductor, and business building background. And then Mike is also supported by a new head of sales and marketing, Nick DiFiore, who's just left Xilinx to come and take over the sales side of the business as well with him.
In terms of where that stock's going to be listed and when the spin-off occurs, and also what sort of percentage Seeing Machines will end up with in the new company, what are you telling investors?
Yeah, Mike is based in Silicon Valley. I think the company will be very global. R&D will remain in Australia where it is today, but I think our growth will be the West Coast US, Detroit, Germany, China, Japan, all of those automotive centers. We need people on the ground there. And so it'll be an American headquartered R&D, global R&D program, and that it'll start its own march towards some sort of IPO event in the future.
And how much of a potential spin-off is Seeing Machines going to end up with? Because as we'll see in just a minute, we've seen a little bit of uplift recently in Seeing Machines shares because of expectations of what's going on at FOVIO.
Yeah. I mean, we wouldn't be doing this unless we felt it was good for the existing shareholders, but we will retain a significant portion of that business.
I think attached to this, but also part of the business, is the fact you're now talking about 13 automakers, is that right?
We have about 14 automotive manufacturers paying us to do something for them. In most cases, so two of them, or one of them has contracted us to deliver a solution for 16 models of cars over the next 4 years. And the others are basically working with us to help understand how they would package that technology in the car, assess our performance, and look at what's actually feasible with the technology. There's a lot of different ideas about how people want to use this.
Yeah, of course it's not just automotive use, and we've spoken about the Caterpillar deal in the mining sector, but I know also that you've got a truck fleet focused product, Guardian,
Correct.
Which is also making progress, isn't it?
Yeah, tremendous progress. So that product, we got off to a little bit of a slow start, but we really launched it this year in North America in March. And the way we sell the product is we go into an assessment component with a fleet. They try it for 3 or 4 months. We benchmark the performance. We look at the improvements that they derive from the technology. And right now, the number of trucks in those fleets where we're assessing the product is well over 100,000 vehicles. So it's 45 or 46 trials in 13 countries, and those are starting to convert. There's quite a bit of news flow right now coming out as these deals start to close.
My understanding is I think there's 29% of total revenue this year was attributed to Guardian, is that right?
That sounds about right.
And what are your thoughts in terms of where this moves forward? How quickly can you up that?
Yeah, it becomes the big earner in the business, and I think it'll grow initially faster than automotive. Automotive will take a little bit of time to catch up because of that build-up in volume, where with Guardian, we're forecasting for this current financial year somewhere between 12 and 15,000 units to be sold. sold. But it's very different than that mining business where we'd sell an expensive computer. So we're migrating from this low volume, high value sale to a very, very high volume, lower initial sales value for the hardware, but a long trail of annuity revenue. So we're really building this recurring revenue stream, sort of like a telematics business.
And you also got a trains and planes business as well, haven't you?
Trains and planes. The aviation business is very exciting right now. I think we have 7 or 8 programs, and those programs spread from some of the large, global manufacturers, the brand names of aircraft, right through to the organizations that run the air traffic control in the countries that we live in, and then right down through to military applications, helicopter, cargo, commercial carriers, etc.
Yeah, I said we mentioned the share price. I've got to talk about this. So I think if we can bring up the share price chart, this is a 2-year chart showing what's happened. In the last week or so, we've seen this uplift in shares. We're now at 5.9 pence. I was reading some broker release recently from FinCap. They're targeting 12 pence a share. We were talking about this before we went live, and you were saying that's, in fact, it's a relatively long-term call, isn't it, from FinCap? Yeah. How happy do you feel about that? And of course, the big question is, does it include the spin-off? Doesn't it include the spin-off? What are they looking at here?
Yeah, that's a really good question. I think that a lot of people are waiting to see what we do with the automotive business, and there's an expectation that may create some pull-through increase in the share price because of the valuations or pre-money valuations that we're getting for that piece of IP. But it's I think it's a bit of a black art, isn't it? The share price. I think for us...
One thing I think probably can attribute to it is the fact you've got a market cap of 60 million at the moment, which I think FinCap is saying fairly values a business as it is.
Correct.
And how much is FOVIO likely to be worth? What's the total value expectation?
Yeah, probably somewhere about the same value.
Yeah, so that would almost account for the 12 pence. But you're saying that doesn't actually include the spin-off, that 12
Correct.
pence.
And and for us, we see each of these businesses being of similar value to FOVIO long term.
Okay. What's going on now? What's your in-tray looking like?
Yeah, I think it's really, we've made, the last 3 years we've invested heavily in R&D, and I'm incredibly proud of, the technology is performing really at a world-class level, and as a result, as we start to show this to people, we are being approached by people from every industry, all over the place for really wanting to look at how we can help develop machines that are really empathetic, that understand their users and make the use of machines just so much more seamless. So it's not just about safety, but it's really moving to that Internet of Things, that artificial intelligence space.
And about keeping ahead of the competition as well. Is there much, are there many competitors behind you?
It's really interesting. I think that's a long discussion in its own, because you really have to break it down into the sectors we serve. And in some cases, in aviation, rail, there really are no competitors. In fleet, there are people that help with driver coaching, but we are the only technology that stops accidents from happening, very different than the other technologies that are out there. In mining, really, Caterpillar is the giant. We're not very concerned about competitors anymore. So it's really, and in automotive, you have to look at companies like, are we competing against Bosch or because really, we're working with companies like Bosch, so the competitors are going to emerge, I think, as that market matures. Right now, it's a bit of a land grab, and we seem to have arrived there first.
Okay, well, look, it's a pleasure, Ken. Thanks indeed for joining us.
Thank you very much.
With some analysis of that. Ken Kroeger is the Chief Executive of Seeing Machines.